if you turn on the news, you'll hear a lot of news about, oh, America has recovered from the recession. Look how strong the markets are. Look at how many, look at how America's doing. Yeah, we've recovered a little bit from the recession. It's a little slow, but look at that. Even on the liberal networks, you'll hear that, oh, look, Americans' lives are getting better. Well, the Federal Reserve reported just on Monday, that total American household net worth had recovered a little bit. Well, how much? Well, it actually increased by $1.9 trillion in the third quarter. Now, that's net worth of all American homes, of households. So you're probably thinking, wow, 1.9 trillion. That's a lot of money. And it goes to a total of 77.3 trillion. Now, however, as the Wall Street Journal notes, Americans' net worth is actually still lower than it was in 2007 before the crash. Well, how much lower? We're still at about 1.4% below the peak in 2007. Now, of course, inflation has increased since 2007. The prices of commodities have increased since 2007. So when you look at it, Americans' net worth, their households, are way below what they should be today. Now think about that. I mean, American households are not worth as much as they were back in 2007. It's pretty sad when you look at it, and especially when you compare it to the banks. Now, the banks have done fantastic over the last few years. They've absolutely done fantastic. Did you know that the top 1% of earners actually took home 121% of the income gains in the first 2 years of the recovery? So for 2007 to 2009, they took home 121% of the gains. Now, if you take more than 100%, it means that the other, everyone else, lost. And that's the American people. The 99% lost a lot of income during those first 2 years of our supposed recovery. And now you have things like austerity, which has been hurting growth and hurting jobs and hurting American families, and also preventing them from being able to pick themselves up from the recession. We still have a large unemployment. Yeah, the unemployment rate is down, sure, right? But that doesn't really reflect people that have dropped out of the market, that are no longer looking for work because you can't find anything in this market. And of course, you have a problem of massive wealth inequality. And this is also a part of that. When 121% of the gains of the so-called recession go to the richest 1%, you know that there's a problem with income distribution. I mean, and then you look at productivity. The productivity gap between how productive Americans are versus how much take-home pay that they get. How much they're paid for how productive that they are. When you look at the disparity of where productivity has shot up through the roof and wages are stagnant. So when you look at this, when you look at the Federal Reserve numbers that show that, yes, our net worth has increased, it's not really reflective of where the normal American families are at. When CEO pay has shot through the roof, and CEO compensation and corporate profits are through the roof, the stock market, which is completely divorced from the average American person. Most Americans don't have stock. So the stock exchange, it doesn't reflect their reality. It reflects the reality of the richest, the top 1%. And so when you look at these numbers, it doesn't really mean a whole lot. It just means that we are still behind as opposed to 6 years ago. We are still way behind, and something has to be done. And we have to grow the middle class again by investing in it. Hey, thanks for watching this video. Please leave a comment below. And if you enjoyed this video, make sure to hit the like button and share with your friends. If you want to see more, go to our channel at youtube.com/TYTNation. And if you really want to support the show, support this channel, go to our fundraising campaign at www.patreon.com/TYTNation. The website is in the description below. Thank you guys, and keep watching.